Guys, last week I told you that irrespective of the open of the market will first move up on Monday on 18th of July. And once it moves up, then it will find some resistances. And after finding a resistance, then the market will come down. And if you see, this is the candle on 18th of July on Monday. Other than that, I told you that if you see that the market has breached all of the moving averages, in that case, the market will move up. Now, whenever the market will move up, it will find multiple resistances, not just the moving averages, but also the previous highs of the candles. And if it breaches the high of this candle, that was 3945, in that case, yes, in that case, the market will have its good chances of further moving up. See, this is almost confirmed that on Monday, immediately upon open, the market will move up. But I'm not saying that there will be a bull candle in the market or the market will move up and move up and move up. No, I am simply saying immediately upon open, okay, the market will move up. So now when the market moves up and when it finds, there's the very heavy resistance in the market, okay, and when the market comes down, okay, so initially maybe like for 1 hour there was an upward movement, but now the market is coming down. Now the question is that when can we expect a bull movement in the market? The bull movement will come only and only when the market breaches this level. This is 3945.86. Once the market breaches 3945.86, then only it can further move up. So you have seen that the open of the market on Monday, okay, it was exactly as predicted. Okay, there was a gap up open, number one. Then immediately upon open, the market moved up. Then it was there for around 1 hour or so. Thereafter this, the market it came down. But other than that, I told you that whenever the market try to move up, okay, it will be a trap. It will be a trap as well as an opportunity. Okay. So now in this video also we will discuss the trap and the opportunity. Okay, and what are the chances that the market will further move up and what are the chances that the market will come down. So guys, this is S&P 500 technical analysis from July 25th, 2022 to July 29th, 2022. As usual, I will do this technical analysis on the weekly chart, okay, and on the daily chart. So first we will begin with the weekly chart, and once we are done with the weekly chart, then we will move on to the daily chart. So this way, by after analyzing the weekly and the daily chart, okay, we will be able to deduce the most probable movement of the market as we are doing for last many months. And that is the reason why the success rate or why the accuracy is more than 80% on this the weekly chart for the S&P 500 index. So now we are going to analyze the S&P 500 on the weekly chart first. Now guys, before I do this the technical analysis on the weekly chart, let me show you one more thing, that yesterday on 22nd of July, okay, I have updated my members. Let's see, the technicals are now getting hot and getting saturated, and the divergence is also increasing in the MACD, okay, the stock RSI, K channel, etc. So I told them that because everything is now getting saturated, so you can expect, because this is a perfect condition for the market to show a reversal, okay, and this is exactly what has happened on yesterday. Okay, so yesterday was 22nd of July and you can clearly see a reversal in the market. Okay, so through these the text notes and also through these the midweek updates, I am trying to make sure that my members, they do not make any mistakes and they trade safely. So this is all the part of the YouTube membership. Guys, this is the weekly chart of S&P 500 index, and we are doing the S&P 500 analysis on the weekly chart from July 25th to July 29, 2022. So when I say the weekly chart, I mean that one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So let's first do the S&P 500 technical analysis on the weekly chart, and then we will do the S&P 500 technical analysis on the daily chart. And this way we will be able to deduce the most probable movement of the SP 500 index. Now let's first do the interpretation of the candle. If you see that this is the candle, this is a bull candle. If you see, okay, means if we try to see the formation of the candle, then you can see that it is a kind of a spindle, okay, with a long body, okay, and the long tails and the long body. So generally, okay, whenever the spindles are formed, okay, so the spindles are the significators of the reversal, okay, spindles. So these spindles are the significators of the reversal. It also indicates, okay, a continuous movement of this the trend. So So now let's do the technical analysis. Now let's do the S&P 500 technical analysis on the weekly chart. Now first comes the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band because the market is still trading between the lower band and the upper band of the Bollinger Band. This means that the S&P 500 is bearish through the Bollinger Bands on the weekly chart. Okay, this thing is clear. Now comes the moving averages. If you look into the moving averages, okay, so moving averages, first of all, there is a clear fan out in the moving averages. Okay, so first of all, there is a clear fan out in the moving averages. This fan out is clearly supporting a bear trend. Okay, this is the first thing. The second thing is that the S&P 500 index has closed below all of the moving averages. Okay, this means that there comes a rejection from the moving averages on the weekly chart for this the S&P 500 index. Now what it means? It simply means that the S&P 500 index, it tried to move up, but it failed. It failed and it closed below these the moving averages. This means that in the coming week, okay, when the S&P 500 index will try to move up, okay, chances are that it will again face a kind of rejection from the moving averages. Two continuous rejections. Okay, sorry, not means see, we are talking about the weekly chart. So we do not need these are two continuous or two consecutive these are rejection. Even one failure, one rejection is sufficient. Okay, so in the coming week, when the market try to move up, and in the daily chart, if you see that on the daily chart, if the S&P 500 index, okay, it is coming down on any given day. Coming down means this is what? This is 3990. Okay, so a closing below 3975. A closing below 3975. Okay, it will or it can trigger a selling in the S&P 500 index. Okay, because in that case the market will see that now that the S&P 500 index is again getting rejected by the moving averages on the weekly chart. Okay, see, whenever we look for the trend, okay, whether it's the bull trend or the bear trend or the consolidation, we always look it through the weekly chart, not through the daily chart. Okay, so through the weekly chart, it is clear that the S&P 500 is bearish, clearly bearish, okay, for last many weeks, and it is expected to remain bearish because we are in the recession and the recession is confirmed. Okay, so this means, okay, so this means through these the moving averages, this is how the market means the S&P 500, okay, it is expected to react. So we will talk about this thing, okay, later once we are done with the technical analysis. Now, so this thing is clear that through the moving averages, the S&P 500 index is clearly bearish. Now comes the Ichimoku. Because the S&P 500 index is trailing, it is trading below the Ichimoku cloud. This means that the S&P 500 index is bearish through the Ichimoku. So S&P 500 is bearish through the Bollinger Bands, bearish through the moving averages, bearish through the Ichimoku cloud. Now let's see what other technical indicators are saying. First comes the MACD. MACD, if you see, MACD is still less than the signal, bearish. MACD and signal both are negative, bearish. This means that the S&P 500 is clearly bearish through the MACD. Okay, means it is directionally bearish as well as, okay, it is bearish in the long term. Okay, simple. Then comes the stock RSI. On the weekly chart, if you look into the stock RSI, number one, both the K and the D channel are still above 50. This is what I told you in the previous week also. If there comes a bull candle, okay, any kind of bull candle, okay, or whether it's a heavy bull candle or a small bull candle, in that case the D channel will also be more than 50. Okay, so now you can clearly see that the K and the D channel, K channel and the D channel both are more than 50. And other than that, the K channel is more than the D channel. This means that the stock RSI is clearly bullish. It is not heavily bullish. It is not heavily bullish. It is just bullish. Stock RSI is bullish. Other than that, if you look into the divergence in the closing prices of the candles, so it is normal. Okay. Then if you look into the volatility, volatility is still around, just around the all-time high level, all-time high. So volatility is still at the all-time high levels, and this is what and this is why I am saying, okay, in all of my weekly technical analysis, okay, but more than that, okay, in my midweek updates that are exclusive to my group members, that I'm telling them that because the volatility is very high, okay, or is trading around these the levels, okay, but if you see the volatility on the daily chart, then you will find the volatility it has come down, okay, but that doesn't matter because on the weekly chart the volatility is still high. So that is what I'm telling my members, okay, through the midweek update, that see the volatility is very high. This means that be ready to see the surprises, okay, and also whenever the volatility is very high or is extremely high, market the technical indicator might not work exactly as predicted. So earlier the technical indicators were working like 100%. Now the technical indicators will work like 70 to 80%. Okay, so now we have seen that through all of the technical indicators, the S&P 500 index is clearly bearish on the weekly chart, except the stock RSI, because stock RSI is the only technical indicator that is bullish. But if you're watching my these the videos, the technical analysis, okay, and the midweek updates, if you are a member of my group, okay, then you must have seen that there are frequent reversals in the stock RSI. So for example, if in the coming week, okay, if we see that there is a heavy bear candle, in that case you will see that there is a reversal in the stock RSI and now the stock RSI is bearish. Okay, so stock RSI, okay, means in order to track the stock RSI, the daily charts are the best charts. Okay, so now we have seen that on the weekly chart the S&P 500 index is clearly bearish. Now let's move on to the daily chart to see what is going to happen to this the S&P 500 index. Okay, so we will do the S&P 500 technical analysis on the daily chart. Okay, and we will see what is going to happen to the S&P 500 index in the coming week from July 25th 2022 to July 29th 2022. So we will see what is going to happen on Monday, Tuesday, Wednesday, Thursday and Friday, etc., and how it is expected to behave. Okay, so this way we will be able to get the most accurate results as we are getting for last many months. So now let's move on to the daily chart of the S&P 500 index. Guys, now we are on the daily chart of S&P 500 index. So we will do the S&P 500 technical analysis on the daily chart. Okay. So before I do the technical analysis, let me tell you the support and resistance levels. Okay. So in the coming week, okay, the uppermost this the resistance level will be at 4065. This is 4065. Thereafter, immediately the next resistance level is at 4035. 4035. Okay, and thereafter, because there was a bearish candle on 22nd of July, okay, for this the S&P 500 index, this means that the immediate resistance is at 3990. Okay, 3988 or 3990. Okay, this will act as the immediate resistance. Thereafter, the immediate support, it comes at 3937 or 3935. Now if you see that yesterday on 22nd of July, when the market came down, is when the S&P 500 index it came down, it hit exactly this the support at 3937 or 3938. Okay, so see, as I mentioned earlier, that my support and resistance levels are not the standard pivot levels or any other support or resistance levels. Okay, this is what I've calculated by analyzing the last 100 years of data, and this is the reason why the S&P 500 index, okay, it always respects my support and resistance levels, whether it is in the bull trend or in the bear trend. Okay, then comes the next support at 3884. Okay, thereafter the next support at 3840, 3840. Then the next support at 3791, next support at 3735, then 3675, and then finally we have 3630. Now you might be having this question that why I am telling you the supports and why I am not telling you these many resistances. There is an obvious reason, and this is the obvious reason. Okay, it is the 27th of July. 27th of July. Now, what is on the 27th of July? On 27th of July, the Feds will raise the interest rate. And when the Fed says that they are going to raise the interest rates, there will be definitely the market 100, 200 or 400%. The market will definitely react to that particular news. Now, if the news says that the Feds are going to raise the interest rates by 75 BPS, okay, in that case the market will come down a little, like up to 3840. Okay, you can expect a 3840 or so. Okay, but if the Fed says they are going with the 100 BPS, okay, in that case be ready for this, like 3700, no, 3600, yes, okay, around, because the 200 week moving average, it is also around this level. So be ready to see, okay, this kind of fall around 3700 or 3600. Okay, and then the market will follow, means the S&P 500 will follow its bear trend towards 3500 and 3300. Okay, so we all are waiting for the 27th of July, and that is the reason why I am not giving you these, the resistance, rather I am giving you the support levels. So these are the support and resistance levels. Now there is one more level, okay, that I want to tell you. Okay, so before I tell you this particular the resistance level, okay, that I'm expecting that yes, the market may retrace to that level, and finally it will fall from that level. Okay, so let me share this information with you, that first of all, if you are not subscribed to this channel, then please subscribe the channel and click on the bell notification icon, so that you will get the weekly technical analysis on time. And also, if you want to join my YouTube membership, okay, where you can see that my members, they are making very good returns, I have given the link in the description of the video. This is my YouTube channel page. Once this YouTube channel page opens, then you will find this, the join button. When you click on the join button, then you will see a pop-up. In this pop-up, okay, you will get these two options. So there will be more options, okay, that will be added in the future. So as of now, there are these two options, okay, only one midweek update per week, or all midweek updates in a week. And if you want to join all midweek updates per week, okay, then you can click on the all midweek updates per week, and through this you will get all of the midweek updates, okay, that I give to my members every week, whether there are 2, 3, 4 or 5. Okay, so at most there will be up to 18 midweek updates in a month. Now these are the members who have joined the midweek updates, and if you notice that, then most of the members, okay, they have opted for all midweek updates. Okay, all midweek updates. So this is what you are going to notice here. So there are many members, okay, who have joined for the midweek updates. Now that we have discussed the support and resistance levels, now let's see, okay, what is going to happen in the S&P 500 index in the coming week. So on this, the daily chart of S&P 500 index. So on this, the daily chart of S&P 500 index, first comes the Bollinger Bands. This is the upper Bollinger Band. This is the median of the Bollinger Band, because the market, means the S&P 500 index, is trading in between the upper band and the median of the Bollinger Band. This means that through Bollinger Bands, the S&P 500 index is bullish. Okay, then comes the moving averages. If you see that there is a crossover happening in the moving averages, means as of now there is no successful crossover, but the crossover is still in process. Okay, so crossover is happening in the moving averages. This means that as of now there is no defined pattern of the moving averages. So now let's not talk about the defined pattern. Rather, let's see if the market is, means if the S&P 500 has closed above or below the moving averages. As of now, you can see that the S&P 500 index has closed above all of the moving averages. This means through moving averages, S&P 500 index is bullish. Okay, but remember, there is still no complete crossover. Okay, means the market, means the S&P 500 index, the moving averages are still in the process of the crossover. Okay, then comes the Ichimoku cloud. Because the S&P 500 index is trading inside the Ichimoku cloud, this means through Ichimoku cloud the S&P 500 index is neutral. Okay, so we cannot say particularly through Ichimoku cloud whether the S&P 500 index is bullish or bearish. So we will discuss the Ichimoku cloud in detail. Okay, then comes some other technical indicators. Now if you see the MACD, MACD is trading above, or MACD is more than the signal. MACD is clearly more than the signal. This means that the directional MACD is bullish. Okay. Now, other than that, if you see that the MACD is positive and the signal is negative, MACD is positive and the signal is negative. What it means? It means that the MACD is still following the bear trend. Okay, on the broader chart, the broader chart says that the S&P 500 index is still bearish in the bear trend. And because the MACD is positive and the signal is still negative, heavily negative, this means the MACD is still in the bear trend. Okay, however, the directional MACD is bullish. Then comes the stock RSI. This is very important. Yesterday, day before yesterday, on 21st of July, the K channel was 100, and this is why, okay, I told my members through the YouTube, okay, channel membership. I told them that, see, that the technical indicators, particularly the stock RSI, okay, it is saturated. K channel has hit the 100, and once upon open, when the S&P 500 index it further moves up, then the D will also hit the 100. When both K and D will be 100, market will not be able to bear that kind of burden, and there will be a reversal. And because yesterday on 22nd of July, because the S&P 500 index it has come down, now you can clearly see K channel is 93, D channel is almost 93, but the K is just more than the D. This means that overall the stock RSI is still bullish. Okay. Then comes the divergence. If you look into the divergence is normal. Then the volatility, and this is what I've told you on the weekly chart also, because the volatility is now almost 79, but still, okay, 79 does not mean that the market is not volatile. It means that the market is still trading around the all-time high volatility. This means the market is still volatile, means the S&P 500 is still volatile. Okay. So through all of the technical indicators, what we have seen is that the S&P 500 index is bullish on the daily chart. Okay, it is clearly bullish on the daily chart. Okay, now this bullish means, when I say that the S&P 500 is bullish on the daily chart, I mean this is not a heavy bull trend, rather it is a short bull trend. Okay. So there is a difference between a long and the short trend. Okay, whether it's the bull trend or the bear trend, and the reason is that we need to look into the daily chart as well as into the weekly chart. Once both daily and weekly confirms the same trend, then only we will say that the S&P 500 is bearish or the S&P 500 is bullish. Okay, so this is the SP 500 movement, bullish or bearish. Okay, it must be looked through all of the technicals on the daily and the weekly chart. So guys, we have seen that the S&P 500 index, okay, so through this the S&P 500 technical analysis, we have seen that the S&P 500 index is clearly bullish on the daily chart, okay, but the same SP 500, through the SP 500 technical analysis, we have seen that the SP 500 is clearly bearish on the weekly chart. Okay, on the daily chart it is bullish, on the weekly chart it is bearish. This means that the long term trend is still bearish, short term trend is bullish. Okay, now let's deduce the probable movement of the S&P 500, or this is the SP 500. So first I'm going to tell you the number, and the number is 4045. 4045. Okay, it will be the magical number 4045, the magical number. Okay, and I will I will tell you about the number. Okay, first comes so if you see, on 22nd of July there was a bear candle in the market. Okay, this means that the technicals, okay, that earlier the technicals were overheated. Okay, technicals were saturated. Now that now those overheated and the saturated technicals, okay, so they have finally cooled down. So the technicals are clearly now cooled down just because of this the bear candle. Okay, but the technicals are still bullish. This means that market is still bullish. This means that the S&P 500 is still bullish. Okay. Now what it means is that we can further expect a bull movement in the S&P 500 index. Okay. Now what kind of bull movement? See, as of now, we are not sure whether there will be a gap up open or the gap down open. Okay, last week we were sure that there will be a gap up open. Okay, but yes, what we can expect is that the S&P 500 can still try to move up. See, even if the S&P 500 has to come down, it can still try to move up. Now, the closing of S&P 500 was 3961. It was 3961. This means if the S&P 500 has to move up, okay, in order to hit the 4045, it has to move up by 2%. By 2%. Okay, so when the S&P 500 moves up by 2%, in that case, it will hit the 4045. No problem. Even if it fails to hit the 4035, no problem. It can still hit the 4035. That is also acceptable. See what so when I say 4045, okay, so what I actually mean is that after hitting the 4045, an immediate hit in the 4045, the market means the S&P 500 index will come down, and there is a possibility of more than 90 to 95% that the S&P 500 will come down after hitting the 4045. But again, do not forget that the market must move up, okay, within a day or two to hit the 4045. But if the S&P 500 takes like 4 days, 5 days, a week or so, in that case, no. In that case, okay, this theory will be invalidated. Okay, but still, yes, we have 4035, and before the 4035, we have the 3990 because the S&P 500 has closed at 3961 on Friday, on 22nd of July. This means that first the S&P 500 index has to breach the 3990. Now, when the S&P 500 try to move up on Monday, and if it is able to move up, then it will find the 4035, then the 4045, and if it is, and somehow if it is able to hit the 4035 or the zone of 4035. See, when I say these numbers 4065, 4035, 3840, etc., these are the support and resistance levels. Okay, now you must always use plus, minus, 5 or 10. Always use plus, minus, 5 or 10 in order to create the zone. And you must always remember that a support and a resistance, support and resistances are not the absolute levels. Support and resistances are the zones. These are the zones, and in order to create the zone, you need to use this number. For example, if you go for 4035, then what will be the zone of this, the 4035? It will be anywhere from 4025 to 4045. Okay, plus minus 10, or 4035, sorry, 4030 to 4040. So that will be the zone. Okay, I'm talking about the zone. Whenever I say support and resistance, I mean the zone. Okay, now whenever the S&P 500, okay, try to move up, then it will find resistance at 4035, okay, and then the 4065. Now the upward movement is expected, or it can be expected only or mostly on Monday, because on Monday it is the 25th of July, then there will be Tuesday 26th, and then finally comes the D-Day. Okay, so the D-Day is the 27th is the D-Day. Okay, because on 27th the Feds will come into the picture, and on 27th the Feds will raise the interest rates, and when the Feds will raise the interest rate, the market will come down. Okay, this is what we know. Now the only chance, the last chance that the market has, okay, is that means it is the Monday. It is the Monday. If the S&P 500 has to move up, then the S&P 500 must move up on Monday, because then on Tuesday, okay, it will be very, very risky. So when I say that it will be very, very risky, I mean that on on Monday and Tuesday, okay, the volatility will be extremely high. Particularly on Tuesday, the volatility will be extremely high. On Wednesday, it will be at the extreme. Okay, until and unless there comes an update from the Feds. Okay, So see, market means the S&P 500 as of now, okay, it is looking for the 75 bps, but as we know that the S&P 500, sorry, not the S&P 500, but overall the economy is in recession. Okay, S&P 500, Dow, okay, Asian markets, European market, okay, Oceania market, all markets are in recession. Okay, so we are going to see the recession. This means that a bull movement is out of the question. Okay, if you're looking for like 5,000, 6,000 by the end of this year, okay, that is out of the question, because the things are going to get worse. When the things will get worse, people will spend less. When the people will spend less, the company's earnings, okay, will get affected. When the company's earnings will get affected, the balance sheet of the companies, okay, the profit and loss statements of the companies will get affected. When that gets affected, the valuation of the company will decrease. When the valuation of the company will decrease, the stock price of the company will decrease. When the stock prices of the multiple companies will decrease, then the index price will also come down. This is the chain. This is basically, this is the cycle. This is how it works. Okay. So what I'm trying to say that, see, as of now, so only Monday we can expect, okay, this is the upward movement on Monday. And also see, as I mentioned, that the market is going to be very heavy, so very heavily volatile. This means technicals might not work exactly as expected, but still technicals will work like 60 to 70%, maybe 80%. Okay, now what can happen on Monday? If the market, if the S&P 500, if it moves up, okay, it will find, first of all, it will find resistance at 3990. Okay, if it hits the resistance, okay, then, and if it is, and if you see that the S&P 500 is struggling, whenever I say struggle, I mean that you should look for at least 1 to 2 hours hourly candles. Okay, hourly candles. So if you see it is struggling, in that case, there are good chances that the S&P 500 index will come down. See, eventually S&P 500 index has to come down because it is in the bear trend. On the broader scale, S&P 500 is in the bear trend. Okay. Now, the other thing is that if it is able to breach the 3990, then it will move towards the 4035 or the zone of 4035. Okay. If you see that there is a rejection from the zone, okay, of the 4035, in that case, again, you can expect that the S&P 500 will come down. Okay, if not, and if it further moves up like 2%, then comes the magical number in the picture, and it is 4045. Immediately upon hitting the 4045, okay, or just like plus minus 1, plus minus 2 or 3, etc., then also the S&P 500 will come down. Okay, so this thing is clear. So this is the very first thing. Now, see, there are less than 1% chances, only less than 1% chances, but still there are the chances that if the S&P 500 index, for some reason, okay, if it is able to move up, if it is able to breach 4045, 4065, okay, then it will try to breach the Ichimoku cloud. Okay, and there comes this, the very interesting thing. If the S&P 500 index is able to breach the Ichimoku cloud in the coming week, then only we can say that now, yes, now it is going to be bullish. Okay, so I don't know like what will be the reason. So there may be a reason like, just like the stimulus, okay, that was there in 2020-21, okay, or something like that. So see, the market, the stock market, what it needs the fuel. What and what is the fuel? Fuel is the money. Okay, stock market means money. So when the stock market is hopeful, and when the stock market see that someone is going to give the money, for example, last time the government gave the money to the to the people, and what they did, okay, they brought back the money, okay, not brought back, but they invested the money in the stock market, and it worked as a fuel for the stock market. That was the reason why the S&P 500, that the S&P 500 index, it moved by 41% within 1 year, and that was kind of impossible. Okay, but because there was a fuel, okay, in terms of stimulus, and fuel was there, and when the news came out that no more stimulus will be there, then the collapse it began. Okay, and now the S&P 500 is more than 20% down. So stock market needs a fuel, and fuel is the money. Okay, so if there comes a news, okay, in the market that the government will give, some kind of aid, some kind of help to the people, okay, or to the businesses in terms of, money, in that case only, yes, we can expect that the market will be bullish, because in that case market will simply, shred off the fears of the recession. Market will say, okay, the recession is there, no problem, but but even in the recession, the companies are going to make money, okay, because of some external help, okay, and that will act as a catalyst, and that will help the market to regain its bull movement. That is the default movement of the market and the stocks, okay. But as of now, because the stock market is sorry, but as of now the S&P 500 is trading in the Ichimoku cloud, okay. Yep. So let me talk about the Ichimoku cloud also, but before that, we were talking about the bull trend. So S&P 500 will try to move up, okay, and if you see that S&P 500 is try to breaching the boundary of the Ichimoku, if it has closed above the Ichimoku cloud, then we will be needing so for the confirmation, we will be needing two successive candles, two consecutive candles, then only we will say yes, now the S&P 500 is bullish, okay. If there comes only one candle and the other candle fails, in that case it will it will fall, not just fall, it will collapse, okay, in this in the simple terms, okay. Now let's talk about the Ichimoku cloud, the theory of this, the Ichimoku cloud, okay. See, the theory of the Ichimoku cloud is that whenever the market, and so whenever the stock market, whenever the S&P 500, okay, not just the S&P 500 but other indices, Dow Jones, Nasdaq, etc., whenever the S&P 500 index is trading inside the Ichimoku cloud, this is a very precarious situation, okay, very strange, or very conflicted situation, because you never know what is going to happen to the S&P 500 index next, whether it will come out this way or it will come out this way, okay. So no one knows what is going to happen to the S&P 500, okay, so when it is trading inside the Ichimoku cloud. So let me show you, one thing, okay? So if you see, it was in December 2021, okay, the market was moving up, it was extremely bullish, it was moving up. On one day, that was 20th of December 2021, the S&P 500 index, it came inside the Ichimoku cloud, it closed inside the Ichimoku cloud, and then we were expecting, not we were, but many people were expecting that the S&P 500 index, this time it will breach the Ichimoku cloud and it will be bearish, okay. But what exactly happened in the market, means in the S&P 500 index? If you see, yes, there was indeed a bear candle inside the Ichimoku cloud. Everyone was expecting, or everyone were expecting, okay, this the bear movement, the fall in the S&P 500 index. But immediately, okay, all of a sudden on the next day, that for 21st of December, there came a bull candle. So market was already bullish, it came inside the Ichimoku cloud, and this is what I say, the conflicted situation, okay, a precarious situation where no one knows what is going to happen to the market, okay. And when everyone was expecting a bear movement in the market, then came a bull movement, a heavy bull movement, okay. Now there is one more theory, okay, with this. Whenever the market, any index, I'm not talking about the stocks, okay, stocks are manipulated, so I'm not talking about the stocks, I'm talking about the index or the indices, Dow Jones, okay, the S&P 500 and the Nasdaq. So whenever these indices, okay, they come into the Ichimoku cloud for the very first time, remember, very first time, okay, in that case what happens? In that case there comes a reversal, okay. Earlier it was bullish, it came down, and then there was a reversal in the same trend, and then the market followed, means the S&P 500, it followed its bullish trend, okay. So I was talking about this, the bear trend. Now when we apply the same theory here, okay, in the present case, so if you see that S&P 500 is in the bear trend, okay, this is the Ichimoku cloud. S&P 500 has entered in the Ichimoku cloud for the very first time after more than 2 months. Again, very first time after 2 months. This means, number one, S&P 500 is in a precarious situation, not just the S&P 500. If you look into the Dow Jones, the Dow is also in a precarious situation, okay, it's in a confusing situation, in a conflicted zone. And after 2 months, the Dow has also entered into the Ichimoku cloud for the very first time. This means the chances of reversal are extremely high as per the theory of the Ichimoku cloud. Chances of reversal are extremely high, extremely high. Okay, this is the theory of the Ichimoku cloud. What is recommended is that whenever you see that the market means the S&P 500 index, Dow Jones, or the Nasdaq, okay, whenever they are trading inside the Ichimoku cloud, then first of all you must not trade, because you never know whether the market will come out this way or that way. Okay, other than that, you never know what will be the movement of the index inside the Ichimoku cloud. One day you will see a bull candle, the other way you will see a bear candle. The next day you will see a bull candle, then a bear candle, or two candles, or one candle, etc. So you do not know what kind of candles will be formed inside the Ichimoku cloud, okay, and for how long the market will remain inside the Ichimoku cloud. Okay, but if you know other technicals, for example, in our case, as we know 4035, 4045, etc. Okay, then the Fibonacci retracement and the other things. So we already know, okay, that even if the market is trading inside the Ichimoku cloud, even if the S&P 500 is trading inside the Ichimoku cloud, we are already aware about this thing, that whenever it moves up, it hits the 4035, then it has to fall. Okay, it will fall. In that case, we need not to wait to see that the S&P 500 is now coming out of the Ichimoku. Okay, so that will be sufficient in that case. Now, so this is the theory of the Ichimoku cloud. First of all, you should not trade, and if you are trading, then use a tight stop loss, okay, and trade through the support and resistance levels and through other indicators. Okay, so as of now, a reversal is highly anticipated, not because of the Ichimoku, but because of the D-Day, that is the 27th of July. One more thing, if you see that the Feds are raising the interest rates by 100 bps, okay, then forget about everything, the market will simply collapse. Okay, then no technicals, nothing is going to work, it will collapse in simple terms. Okay, then comes the bear trend. Okay, so we have talked about the bullish, okay, the circumstances and everything. Now comes the bear trend. For the bear trend, okay, what we are going to see is that whenever you see that the S&P 500 index is coming down, first of all it will find the support at 3937, 3935. Then the next support comes at 3884, and because the moving averages are also around 3884, so this will act as a very strong support for the S&P 500 index. Okay, after breaching the moving averages, after breaching the 3884, then it will find 3840. Okay, again a very good support. Then comes 3791, then comes the 3735. Yes, so as of now the 3735 will act as a very strong support for the market. So we have 3840, 3735, and what? And 3884. Okay, so these are going to act as very strong support for the market, particularly the 3735, because not 3735 only, but 3840, because there is also a confluence zone in the market. So there are multiple confluence zones in the market. Okay, that is the reason, okay, why it is going to act as very strong support or the resistance level. Sorry, not the resistance, but only the support, very strong support level. Okay, so the downward movement is very clear, or all you need to look into the support levels. The upward movement, okay, yes, that is confusing, that is conflicting. For that we know, okay, the level 4045, 4035. Other than that, we know that 27th is the D-Day. Okay, but yes, we the market, the S&P 500, Dow Jones, Nasdaq, okay, is not going to wait for 27th. You will see some kind of unexpected, okay, unexpected movement in the S&P 500 index on 25th, 26th itself. Okay, also do not forget that the market means the S&P 500 index is heavily volatile. This means be ready to see the surprises. Okay, whenever you see the surprises, a surprise movement in the market, okay, do not get surprised. And guys, if there comes any abnormal movement in the market, in the S&P 500, any abnormal movement, okay, or if there comes more confusion, then I will update you, okay, through my YouTube membership. So in that, the YouTube membership, okay, I will give you the daily updates. So I will give you the text updates, okay, and I will also give you the S&P 500 analysis, okay, on the daily basis, okay, means the videos particularly, okay, and this the analysis through the text notes. So guys, if you have not joined the YouTube membership, then you can join the YouTube membership in order to get the daily updates of the S&P 500 index, okay, video and the text updates. Means video means the analysis, video analysis, just like this weekly technical analysis, okay, and also the notes. And guys, there is one more thing, as you have seen that the accuracy of the technical analysis is more than 80%. 80 to 90%, okay, and sometimes more than 90%. So 80% in case of weekly technical analysis, 90% or more than 90% in case of midweek updates, because midweek updates will tell you what exactly is going to happen to S&P 500 on that particular day, immediately, or means on that particular day and the next day. Okay, so you are very much aware about the things, what is going to happen, how it is going to happen. Okay, so you know everything in advance. Okay, so guys, if you have not joined the YouTube membership, you can join the YouTube membership. Okay, the link is in the description and also in the comment section. Also guys, do not forget to subscribe the channel, okay, and click on the bell notification icon. And if you have liked this video, okay, then hit the like button. Other than that guys, if you have any questions that you want to ask, if you have any queries that you want to ask, or if you want to participate in the S&P 500 knowledge transfer program, okay, where I will teach you everything about the S&P 500, the analysis of S&P 500, okay, the movement, okay, the technical indicators, okay, the strategies, the hacks. So I will teach you everything through that, the S&P 500 knowledge transfer. So I have also given the link in the description of the video for that particular the S&P 500 knowledge transfer. If you want to participate, okay, you can visit the link.